Good day, everyone. Well, I've always said that centralization destroys innovation, and one of the early proofs of this was in the late 90s. Celera Genomics, among many other companies, proved how costly and slow the US government moves when it comes to cutting-edge technologies. They mapped the human genome in less than 1/10 the time and at less than 1/10 the cost of the bumbling US government. Balaji Srinivasan said, quote, "Centralization, specifically the US government, is most responsible for holding back scientific progress. The same cohort of people in the centralized scientific establishment award the research funding to themselves and others on their committees." Now, that goes a long way in terms of where things can go in a positive direction as we decentralize these centralized systems through Web3, and this is basically blockchain technology. And this is more something that is going to come in the years ahead, and is the essential reason why crypto technologies, which have a valuation right now of about 1 trillion, will get into the tens of trillions in the years to come. And that's why the crypto picks list is going to become populated once again once this tightening phase comes to a close. But that is not probably going to happen until we see at least 2 more rate hikes on the table and markets retest lows, and maybe we see the Fed chair's hand forced once again to halting the rate hikes. As for markets, as we warned, major averages in cryptocurrencies are rolling back over as the Fed is intent on hiking rates to a target range of 350 to 375 basis points. And that's based on his Jackson Hole remarks. The CME Fed futures is now pricing in 175 basis point hike in September, then 150 rate hike, and then a 25 basis point hike in December. And that would bring the range to 375 to 400 by the end of this year, up from the original estimate of 350 to 375. Given record levels of debt and growing delinquencies, markets will not stand for hikes to such levels, so may retest lows well before then. The Fed chair has room to hike given the extent of the dead cat bounce, so he may get to 350 to 375 before he has to calm markets by saying he will no longer tighten the balance sheet, that is, put rates on hold, much as he did in December 2018, just after the Christmas crash. While some have said inflation will moderate due to lower commodity and housing prices, supply chain constraints together with recent remarks by OPEC cutting the supply drove oil over $100. Inflation will reaccelerate if these energy prices continue to rise. The economy faces supply-driven inflation versus demand-driven, and the Fed cannot control supply-driven inflation. Demand is strong because central banks printed trillions of dollars, and at the same time, supply is weak because nearly every government policy in the US, UK, and EU makes it harder for people to produce. Now, this factor, as legendary futures trader Ed Seykota famously wrote in his book, Gavopoly in the 39th Day, is the hallmark of empires in decline. Seykota said that when the amount of time and money spent on dealing with governmental bureaucracy outweighs productivity, that is the beginning of the end. We are well into the 39th day by his count. They can only try to slow down demand by hiking rates before the economy breaks. Meanwhile, the GDP price index is soaring while savings are plummeting. Thus, consumers cannot withstand higher interest rates together with inflationary pressures, as the majority will run out of money. This will eventually have a direct negative impact on corporate earnings as people spend less. On top of this, the new threat of widespread tax audits is yet another barrier to Americans' productivity and comes at a time when the economy needs serious help. So far, this is playing out as it did in France in the late 18th century, when the French government was in desperate need of money after spending so much to gain their independence. French citizens were harassed and intimidated. Tax collectors had the authority to conduct surprise inspections looking for hidden wealth and breaking into people's homes. The Inflation Reduction Act funds the IRS with $80 billion. This is a staggering amount, given that the annual budget for the IRS is just $12 billion. The majority of middle-class Americans and small businesses will be under scrutiny. Now, as for unemployment, it's key to note that in past recessions, unemployment tends to reach major lows before it starts to rocket higher, as you can see from the chart. This time should be no different, so expect weekly jobless claims and unemployment to eventually spike higher if all past recessions are any guide. The weekly jobless claims reports Thursday at 8:30 p.m. Eastern Time, and then the unemployment report will be released on Friday at the same time. So stay tuned. Gil, how are you seeing everything?
Well, I think it's as we have been saying, it's like we said, this is a bear market rally. And I was amused by the emails we get from some members, mostly new members who don't really understand that we don't really favor quantity over quality. And if we believe we're in a bear market rally, we're not going to sit there and tell you we're in a confirmed uptrend and that you should be buying stocks, because there's nothing to buy. There are trades to be had if you're nimble enough, but there's really nothing to buy, and there hasn't been. And I'm actually surprised that these goofballs over at IBD have this uptrend under pressure thing. It's almost comical. I imagine that they have these meetings to decide what they're going to put for their latest market label. And, that somebody said, oh, let's say market in confirmed uptrend, and then they all laugh together. I mean, they're really messing with people as far as that goes. But you can see what we've got going on here. If you look at the SPY, I think you're headed for the third leg down, the third major leg down. So you have one leg down here. Get a bigger pen. So let's make this a little bit bigger so you can see it. So just looking at the SPY on a weekly chart. Take it out a little bit. You can see basically we got one leg down here. Here's your second leg down. I count that as one leg. Ran into resistance here at the 10-week line. And then textbook resistance at the 40-week line 3 weeks ago. And now you're busting the 50-day line. And I think the next leg down is going to be deeper than this one, and we may end up going straight down. We're down now, 117 on the Dow. So that they run the futures up overnight. It's classic bear market action, where you have up openings followed by sell-offs. And I don't understand what's going on at places like IBD where they don't see that. And I have to think that with Bill out of the picture, nobody there knows what the hell they're doing. So they just maintain what they think they read in some book and tell people that you're in an uptrend that's under pressure. I don't see an uptrend. I see a long downtrend. You had resistance yesterday. Well, this morning actually at the 50-day line on the NASDAQ. Same thing happened on the S&P. So that's really what's going on. And I think you're on the verge of splitting wide open. We have the jobs number on Friday. Chris, do you know what they're expecting in terms of earnings, or not earnings, but in terms of the number?
Actually, I don't. Maybe someone out there, our listeners would, because that's easy information.
Yeah,
I can probably
knows.
Right now. Whatever it is. I mean, it's the thing is that it's going to be a very low number because unemployment tends to bottom before it starts to soar, and that is the graph that I showed is pretty telltale sign that we're probably near the very lows of what we're going to see in terms of unemployment in this cycle. So it's going to be like what 4.0 something. I'm just seeing
something like that. I can actually look that up. Economic calendar. Here we go. That's going to be September 2nd, right? So they're looking for 310,000 on non-farm payrolls, non-farm private 300K. So we'll see how that plays out. But in any case, what are we doing here? I think they opened the market up this morning again. It's really a very nice setup if you're tracking the right stocks. I mean, most everything is busted. So I come after some of these solars because they keep rallying them. So here you have First Solar here on the 5-minute chart. You can see that you had a MACD cross in here. That occurred right at about 128, 127.50, and you're hanging out at 126.36. It's up because somebody raised their price target on the stock. Yesterday it kissed 130 or went just past on news that they're going to spend 1.2 billion to increase their manufacturing capacity. Big deal. That sent all the solars up. So basically what I'm looking at are what are the last shoes to drop. And of course, I think First Solar is one of them, especially that they're given that they're pushing it higher on news. And that, of course, that takes the other ones up. But they've been shorts on any rallies. You could see Sunrun this morning around the 10-day line. It's reverse, and you can actually pick it off. I also got this one, shorted this one this morning. You got the cross here as you're sitting around 33.20. Now you're 32.48, and it looks like it's heading lower. So that would be a good example of the type of stuff I'm coming after. We'll look at SunPower also. All of these have been running on news that the government's going to spend, what was it again, 369 billion on pork barrel spending for the so-called clean energy industry. It's a bunch of BS in my view. But here you have SunPower triggering a short sale entry at the 20-day line, and you could have been on it earlier this morning when you had a gap up move that took you above 24.50. But you had a MACD cross in here, so you kind of had the finesses. But once it busts the 20-day line, which is where's the 20-day line on this one? Let me put up my data window. Hopefully this works. What is it? 24.01. Once you busted that, you're off to the races with that. And it's heading lower now. So you got that. You also have Solar Edge. This one's already a late-stage failed base, and it's been shortable along the 200-day line. They tried to get it up this morning, couldn't do it. Needed some Viagra, didn't have any, and it rolled over. Enphase is also triggering a short at the 10 and the 20 this morning. Notice how it's come up to the $300 century mark here. This is the first time it's ever pushed above that level. And remember, the Livermore century mark rule applies only to the first time that a stock comes up to a century mark, 100, 200, 300, 400, 500, etc. I notice some people on Twitter think that anytime a stock crosses those numbers, that it becomes a short or a long. I think it was Alibaba, was it? Last week you had these Chinese names are all up on news. Yeah, and here's the 100 level. So somebody was tweeting on my page that, oh, it's a short at the $100 level. But as you can see, it's been back and forth through that level many, many times over the past year, actually. And it's been, that's not the first time that it has pushed above that. So be careful, as Bill O'Neill used to say, in the stock market, quote, a little knowledge can be a dangerous thing. What I mean is that people think they know something, but they don't really know what they're talking about. They have a cursory understanding of something, and they don't really delve into understanding what it really is and what makes a century mark move significant. I think it's the first time you go through. If you fail there, it becomes a short. In any case, we've written about that endlessly, so you can check that. But there's nothing going on in Chinese stocks. Looking at Enphase again, I should actually point out, and this is also the case for First Solar, and that is that you have this is a big punch bowl formation. If we look at the peak here on the left side, it's what's going on here? It's 182.46, I believe. So you're dropping just below that. So that's triggering a double top short sale entry right there. If you bust the 20-day line as you are now, that's starting to confirm a potential punch bowl of death. So a pod short sale entry. Probably you could just do it here, use the 10-day line as a max covering guide, or you could use the 20-day if you want to keep things really tight and work it from there. So that is a punch bowl that is starting to turn into a punch bowl of death. If First Solar fails, then you have this left side peak, which is at 123.13. For some reason, my data window isn't setting up right. I don't know what's going on here. But in any case, you can watch that 123.13 left side peak here. If it breaks below it, that would trigger a short sale entry. But I'm already short this one on the 620 chart, so that's working out so far. But so far, it's just it would work out as a double top short. So I'm getting a little aggressive in trying to anticipate this within the context of a market that's continuing to go lower. So in this case, I would look for a break below that 123.13 left side peak on the punch bowl, and then a bust through the 10-day line, and then I might just be, you know, very aggressive on this at that point. Once you bust the 20-day line, now you're talking about a possible punch bowl of death in progress. Now, remember one thing about punch bowls and pods. You got to have a punch bowl first. A punch bowl is not a punch bowl of death until it fails at the 20-day line. Before that, it could become an aggressive short at the 10-day line on a breakout failure, such as we might see here with First Solar, trying to break out of this. What is this, Chris? Can you do a quick calc? Is this like 53% deep or something like that on First Solar? It looks like it, roughly. But in any case, go ahead.
Just it's been halved.
Yeah. So okay. So you have this move straight up on news. Okay, it can't sustain itself because it's straight up. It doesn't consolidate. I would have to say if I'm looking at this one, comparing it to end phase, what's probably a little better here is that you did do some consolidation in here in the middle of the pattern, but still it's coming straight up off the lows here and straight into new high ground. It's a little bit premature, so that still is prone to failure. But they're basically a similar type of setup here. We also talked about this Celsius holding, so I get a kick out of this one. This actually triggered a short sell entry today at the 10-day and now the 20-day. So this is a punch bowl formation. Again, it's a 63% deep cup or a punch bowl. And as it busts the 20-day line, it triggers a short sell entry right there. We talked about that over the weekend. And I think it's going to. I mean, they're going to make $1.28 next year. They make some energy drink, which a lot of people on Twitter are telling me tastes like crap, which doesn't surprise me because most energy drinks taste like crap anyways. You're not a drinker of energy drinks, are you, Chris?
Oh, hell no. Stay away from those.
Yeah, they're garbage, so I don't really understand. So somebody tweets at me, oh, well, it could be bought out. It's like, who would be stupid enough to buy this out? All I know is you have a stock like Monster Beverage, which still sells a fair amount of their garbage. That was a double top short. You can see how you could have executed this here using this left side peak right here as a short sell entry 5 weeks ago on the daily chart. But that's it's not really a pod because it's not deep enough. But they're going to make $3.30 next year, and they're selling at $88. These guys are going to make $1.28. Celsius Holdings, and this thing is absurdly valued from the perspective of a PE expansion. There's no way in hell a PE expansion like that is going to hold up in a rising interest rate environment, and even less so in a bear market environment, which is what we're at. So you can see we're still pretty volatile. This thing's all over the place. But for the most part, it's just going down. Any questions about stocks? These are my primary short sale targets today. The solars that I talked about, and this Celsius Holdings. Now, other things to look at. What's very interesting here, and this sort of highlights how freaking difficult this market can be. We like this on a very quiet pocket pivot here. You can see there's the volume picks up. It's very subtle, very quiet, and we've liked this on a thematic basis because nuclear power. And we've had news over the last few days. I think over the weekend there was news that Germany and Japan and other countries are going to continue with their nuclear programs because they realize it's the only way they're going to keep their electric grids up with all the crap they want to run off it. So that sent these stocks higher. So, but what you had here was some news about Japan getting back into nuclear power after Fukushima. We talked about this last week. And so what happens is you get the pocket pivot here, the thing blows up and the selling volume looks pretty nasty. But then what happens? You undercut this low here and you turn back to the upside. So you could have bought that. And then when you pushed above the 50-day line, that's a moving average undercut and rally type move. But this is all occurring in a weak general market environment, so it's very tough to come after it. But it is moving higher. So it does confirm our view that thematically there is something here. So, a move isn't going to occur in 1 week or 2 weeks. So really what you've got going on is Camco is pushing for the prior highs. So it could turn out to be a double top short sale entry. If it does bust below this left side peak at 28.28 here, that would trigger a short sale entry there. So that's something that you could watch for. But it could potentially push a little bit higher. But if we eventually do get into a bull market, and I don't anticipate that that's going to happen for a while, I don't care what IBD says, this isn't going to be a name to keep an eye on. along with potentially UUUU, which is Energy Fuels. It's a smaller name, but it's hanging along the 200-day line. Notice how it tested the line today and held. That's pretty impressive for this little guy. But he's in a position where it could become a double top short or a short at the 200-day line if it busts. And that would likely continue or occur in a continuing market break. So anyways, still no questions. So don't you guys have any hot short ideas you want to ask us about? General Motors, I think I was talking about this last week, that what has happened in the auto loan industry is exactly what they did in the mortgage industry, the home mortgage industry in 2006, 7, and 8. And that is that people unqualified for big car loans were able to get them. So you have instances where somebody's making minimum wage and is able to get a $40,000 car loan thanks to PPP and other government largesse. And so I think you have an impending issue for the auto industry. So, things to watch for here. This left side peak up here is at, let me check this. So you have a left side peak here of, that would be here at 39.64. So you triggered a short sale entry today at the 10-day line and this left side peak. So now that becomes your covering guide. And if it busts a 20-day line, then you have a cleaner short sale entry trigger. VRTX working out nicely as well. Yeah, Vertex, that one is was initially, first time it went through the $300 level is there. And as Livermore used to say, in his experience, you get 10, 20, 30 points in a jiffy, and that did not happen. What it did is fail in a jiffy. And once you busted the $300 level, it became a short along that level. And it has slowly triggered secondary short sale entries. You got a bust here. So now you're a late stage failed base in progress, but you bounce off the 50-day line. That's very textbook. Rally back up to the highs of the initial break through the 20-day line and also into the 10-day line there. And break lower. And today you run right into the 50-day line, and that was a short there as well. So, if they want to set them up for me in the morning, every morning, and with the indexes up or the futures up overnight, because they can push them all they want overnight, I'm happy to take the short sale entries. Another one that was in play, and for those of you who follow me on Twitter, I actually talked about this yesterday after they reported earnings, which is CrowdStrike. The company basically confirmed that in 2023 they will earn $1.33. So that's 100 and what? What is that? At 109. So what? 189 times earnings for 2023. I don't think so. So this thing, it opened up slightly, broke at the 10, 20, and then the 200, now the 50 as a short, and it's heading lower. So that's a nice opportunity to work on when you have an up open like we did today. So somebody says they're looking at something like Tesla. Well, Tesla's been a short at the 200-day line, and that was a short last week, I believe. Yeah. So now you're coming down into the 50-day line. If it busts a 50-day line, then you have a secondary short sale entry trigger. But in this position, I'd probably be leaning towards looking for a rally into the 20-day line, which you didn't get this morning. It opened up slightly, and it's just continuing lower. So now let's see, Dow's down 51. Yeah, it's very volatile. It's going to be a very volatile environment. Mainly what I do on the short side, if I can hit something early in the day within, say, the first half hour, and I have a decent profit, I'll take at least part of it. The idea being to build up a cushion so that I can sit through a lot of this crazy volatility. But, they had everybody believing that we were starting a new bull market based with two meaningless statistics. The first one being that whenever the S&P 500 retraces 50% or more off the lows, it never goes back and starts a new bull market. Same thing, the NASDAQ up 20% off the lows, and that means it's starting a new bull market. That's all BS. I mean, we've seen the NASDAQ rally in 2000. The NASDAQ rallied over 50% off the lows. So it did a 50% retracement, and then it broke to lower lows in September 2000. So that's all baloney, but they've got a lot of people believing it, and all the talking heads are up there telling everyone you got to buy stocks, and you're getting I got an email today from Seeking Alpha or somebody telling me, oh, all these stocks are bargains, it's bargain land. Right. I'd also say that this is very, very textbook in the sense that in 2000, the market had a bear market rally during the summer and then rolled over in September of 2000. And it even fooled Bill O'Neill, who believed that we were starting a glorious new bull market based on the precedent of 1962. You might be familiar with that. I guess somebody told me they've been using that precedent over and over again for the last 2 decades. But in any case, you also had in 2008, after the summer rally, you had a big bust in September, October, and everything just came apart. So it's interesting that here you are once again. And the pivotal event, I think, that set this off was, of course, Powell's speech last Friday, where he basically reiterated that, hey, we're raising rates and we're not stopping. So get this Fed pivot thing out of your head. It's not going to happen. And so the market said, whoops, got that wrong, and immediately sold off last Friday. And here we are heading lower. And, I think you're headed to the lows. I think you're headed lower than that. I think this is going to get really brutal. The question is, if you're going to play it on the short side, you have to be pretty nimble. And if you're not oriented towards the short side and you are more of an intermediate trend long player in classic O'Neill style, then you just want to stay out. No reason to jump in. Don't get eager. There's nothing really happening. You look at some of the calls. These have been other leaders. You see.
I actually wanted
go ahead
to say on that S&P, if you look at the major averages like the S&P or the NASDAQ, even the downtrends, they're very choppy. There's a lot of these, swing upside reactions on the way down. And then you do get your dead bat bounces, like the one we had in March of this year, where, the market rallies for 3 weeks, and it rallies very sharply for those 3 weeks. And then we had the most recent dead bat bounce, which was a pretty vicious bounce. And it liquidated a lot of people in crypto, for instance, who are betting that the market's going to go lower. So the shorts get cleaned out during these types of reaction rallies. But we've illustrated to you in the year 2000, the year 2008, 2001, 2002. These were atrocious bear markets, and nevertheless, you had these serious reaction rallies, which can wipe out the shorts in short order. So just be mindful that if you're playing the short side, you almost have to be shorting, like we say, we advise shorting into strength if it's a stock or a major average. And you can look at the price volume to give you some kind of clue as to whether the buying pressure is starting to ease. But it is tricky. And so it's, the short selling game is definitely not for everybody. I like the crypto side of shorting on the futures. You can buy futures short contracts, and you can use Bitcoin and some of the leader.
Biddy works pretty well too. The short Bitcoin strategy, shit, that one works.
Yeah, exactly. So there's these beacons out there that you can use as guides to guide your position size in whatever you're trying to short. I mean, I personally like to short the former leaders of crypto, like Axie Infinity or Sandbox, Phantom. These are ones that had tremendous gains. We're talking, 100-fold X gains from 2020. And they're still way up there. If you look at the weekly charts going back to 2020 on all these, they're still a long way down for these names. And a 50% drop from where they are right now is just a little blip on the chart. So in other words, these names during bear markets, if 2018 is any guide, or 2014, they tend to get halved more than a couple times. So if whatever your peak is, say your peak is 100, just to easy numbers. So one halving is 50, another halving is 25, another halving is 12.5, another halving is 6.25, and so on. And if you all remember, in 2018, the vast majority of these leading cryptocurrencies lost 98, 99% of their value. So 98%, how many halvings is that? do the math. And you'll see that if you hit the short on the right down leg, it doesn't matter if a crypto is already off 90%. It only has to go down 50% more from where it's at for it to now be down 95%. So just get used to working with the percentages in your head. And going from 90 to 95%, well, pretty much every cryptocurrency did that in 2018. And then pretty much every cryptocurrency went from 95% down to 97.5% off peak. That's another 50% drop. So there's lots of shorting opportunities in these kinds of bear markets, and that would be my advice. Is don't. I hear the argument all the time. Well, it's already down X%, so how much further can it fall? Well, look at past bear markets, and you can see for yourself that I think that the bear market is far from over. Ultimately, the crypto market is correlating heavily with the stock market because we're in such a macro environment. And I do believe that, you know, look at where the S&P is right now and the NASDAQ. We're definitively rolling over because of Powell's hawkish testimony. I would expect us to retest lows and then plumb to new lows. And I don't think that Powell is going to relent. As he said, he doesn't really matter where the markets go. He's got to get the interest rates up to at least a range of 350 to 375. That means 3 more rate hikes on the way. So I think that the shorting is the place to be. That's where that's the only type of trade I've done all this year, and I'm up for the year. Most people, everybody in crypto is down, or most people. I won't say everybody, but most people are either the lucky ones or the ones who followed our advice and then went to cash, and they're just they're more or less flat for the year. Then they look like champs.
Yeah, I'm just cycling through some names here. Semiconductors are all getting blasted. I don't understand how you can call a new bull market when you have things just blowing up here left and right. That's why I'm thinking these guys over at IBD must be in an alternate universe. What do you think?
Well, it's probably a lot of group thing going on over there, you know, and that can be, well, look at what's happened with, I mean, the talking heads on Fox and CNBC and then YouTube in the crypto space. Everyone's been talking their book. Everyone's been calling for a major low in Bitcoin and crypto since January, and most of them won't relent. They just keep trying to pick the bottom, and the bottom still, everything keeps going lower. And then they justify it. They justify, well, this happened, or this bad news happened, or the macro environment. I mean, it's only one of the most popular guys on YouTube finally today said, guess what, guys? The macro is really, really important. I'm wedded to the macro. Powell is going to pummel the markets. We're going to go lower. We're going to go lower. I'm thinking, wait, where were you for the first 6 months of the year? Or rather, the first 8 months of the year. You know, and actually gave a talk about 2 weeks ago on how much money he lost in crypto. I'm thinking, you're doing a big disservice to your following, because if you lost that much money, that much percent, I mean, he's so far off his peak. What do you think it did to your listeners? And he's one of these guys who are, you know, closing in on 1 million listeners on YouTube. So, I mean, it's a bit of a disaster out there, and it's a replay of 2018. I don't think he was around in 2018, but 2018, you know, that was a bloodbath as well.
Oh, so somebody who wasn't around in 2018 is suddenly a crypto expert. I love it. Anyways, so basically I gave everybody, I'm looking at this one too, Arista Networks. You are you're just below the 20-day line. You're testing what is that black line, the 200, and that may morph into a short here as well as it busts, but it already did up here. But basically, I give you guys some ideas that I'm working today, so I think you can focus on that if you want to. Otherwise, I think you just stay in cash. So, Chris, got anything else to add?
No, not really. I mean, you know, I think for the lucky ones, they are the ones who are really not doing much in this market. From March of 2000 to March of 2003, I did very few trades, and I don't short stocks, so that's not my game back then. And I still really, I'm not comfortable shorting stocks. So you got to find what you're comfortable doing, what works for your risk profile, your trading personality. And I find that shorting crypto though works really well for me. I find that I feel more comfortable with the risk reward and the dynamic movement of crypto than stocks. Stocks feel more noisy to me, although of course shorting stocks in this kind of environment is great. And I know there's obviously a lot of our followers who've done well following some of our guidance there. But since crypto's around, and same thing with the long side, when the stock market was in a bull rally, I wasn't buying stocks. I tend to like crypto because there's so much more asymmetry, and the asymmetry works in both directions. So I prefer the risk reward I get out of crypto, shorting crypto this year, than say going short stocks. That's just me. And crypto is nuclear fuel, so it can blow up in your face in either direction. So you really got to be comfortable with the dynamic moves in crypto, because they're excessively volatile. When you least expect, you can get your face ripped off tenfold compared to stocks. But I mean, it works for me. I've been dealing with crypto since 2013, so I think I've just grown accustomed to it. But again, we don't put a crypto picks list that shows what I would suggest on the short side, just because, again, when this stuff rallies, it's not uncommon for this stuff to go up 50% on you, and you don't really see that in stocks. It's very rare that a stock that you're short is going to rally that much. So it's a totally different risk reward dynamic.
Yeah, look at this.
Just know that.
Now. So the market the Dow is, well, NASDAQ's up now, so they're pushing it back the other way. Not unexpected. Anyways, okay, so that's all we got, huh? So I showed you some ideas. I think you can dwell on those. Most everything is rolled over, so we're looking at rallies to short into, and the last few things that are basically going to be the next shoes to drop, and I showed you some of those, and I think that's enough for now. Anyways, so that's all. We'll catch you guys next week, and good luck. We'll see how things go after Friday's jobs number.
So long, everyone.